Welcome back to Trading 360. As the S&P and NASDAQ 100 are hitting new highs today, we have some trades for you. The big three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy, is with us. How are you feeling about another record day? It was interesting to see Bitcoin going above 50,000. Overall feeling for this market, at least in this first half of the year. Your thoughts?
I mean, right now, Nicole, the trend is certainly very positive. It's really hard to fight the trend at this point. And I think people just have to be aware, though, that, whether it's in a couple weeks, maybe at the end of earnings season, we are going to have, in my opinion, a pullback at some point, and a healthy pullback. When I say healthy, I don't mean 10, 20%. I mean, a pullback that is healthy for the market. So what I always tell people is in an environment like this, ride the trend. Stay in these, positions, stay in your portfolio. However, when volatility gets so cheap and insurance gets so cheap, start buying a little bit for when we do have that pullback a little bit.
I see. All right. That being said, let's get to Disney. We heard a lot from Disney last week. It had an incredible pop last week after the quarterly report. And so tell us a little about your Disney thoughts today.
Boy, what an incredible pop they had. What a gap up. And to me, there's still a lot of upside, but they have to hold at this 110 level or so, or we could get that dreaded gap fill back to the downside, which is down around 100 where it was just pre-earning. But I love the bounce idea there back to the 110 or higher range if it does fall back. If it holds here, okay, if it holds here, 112.50-ish or so, that is a pivotal point for Disney. It can break out big time above there. We're not so far away from there now, trading 111-ish or so. That 112.50, 112.70 area, which is the 52-week high there, watch that because that could be a major breakout.
All right, and even today it's continuing this run. I mean, so let's say month to date, right? For February, it's up 15% already. 1 month up 23%. It really has had an incredible run. So, Ben, as you take a look at the Disney chart here, your thoughts?
Yeah, this is a great chart, guys. Scott picked a winner here, that's for sure. I did take note of that reaction to the earnings, and a couple things that Scott said we're really seeing playing out in this chart, right? He was talking about pullbacks being healthy. He was also talking about how we need to hold here in the 110 level. I've got my eye more on 109 than 110, but what's a buck between friends here? Let's just take a look first and foremost at a more granular time frame 15-minute candle chart, and you can see the two phases of development as we transition from that horizontal kind of lackluster low conviction phase into that news-driven high conviction initiative type phase where the market's really created an imbalance here right now favoring the sellers, right? Because they can just put a price out there and the buyers have to just chase and grab and higher. Here that's more two-sided, right? The market's kind of being really efficient. Here it's kind of inefficient, but you transition from one phase to the next. And again, this was definitely news-driven, so I want to just show you what we're looking at here in terms of the two phases of development. And this is a 15-minute candle chart. You can see 4 separate areas. So Scott was talking about 110. I said 109. That's the area we're transitioning around right now. I think as long as we hold above 106, the bulls are still in charge here. You can see areas where the market has paused, again, as Scott talks about those pullbacks, those healthy pullbacks, and then kind of regain composure and continued that trend to the upside. Look, here's what we just looked at. This move right here is what we just looked at, but also notice no stranger to big moves up in reaction to earnings. This stock, Disney, has done well the last couple quarters on the news here, and you can also see bottom left, top right. You got a pretty easily identifiable trend to the upside here also, not only on a 15-minute candle chart, but also an hourly candle chart. 82, 93, 97, again 109. So you can see values moving higher and higher. Let's take another step back, and I want to show you why this move up here recently is significant, because we're looking at a weekly candle chart here, and it reversed a downtrend that we had been seeing. So we were just talking about how value's been moving higher off those lows from October, but you can see that it had been moving lower. At that point, the bears wanted to see a new area of value form at a lower level below 82. What happened? We took out 100, and everything back above 100 invalidated that trend that we were, that working assumption we were trending lower. So yeah, quite the reversal here. This is seeing some conviction to the upside off those October lows.
Yeah, and to your point about the earnings, that sometimes Disney pops on the earnings, the questions always become whether or not, there's this euphoria and excitement around Disney, and then it starts to fizzle, and is Disney doing enough? And then you have Nelson Peltz's commentary. Do you feel like Disney's in a good place now, Scott?
I would feel better if it held this area and consolidated here for a few weeks, maybe even a month. Then I would say with conviction, just as Ben was pointing out that consolidation prior to earnings, then I would say with conviction, Disney is in a very good place. But we know that, it really depends. When we see conviction in a stock, it's usually when it trades pretty sideways for a while after a big move. That's what I'd be looking for.
Yeah, understood. Okay, next up here, you have IBM. Why is this one on your radar today?
Boy, it's been a long time since IBM has been on my radar, quite frankly. But I think that this cloud name needs a little bit more attention and respect. And it has an unbelievable bull trend in this market and great upside potential, in my opinion, if it can crack the 189 price or so. I think if it does, it quickly tests 197, maybe 200. There's a big gap from earnings, just like with Disney, down around 173. But what I love here, Nicole, is implied volatility, option volatility is extremely, extremely cheap. So if you are playing for an upside pop here, this could be a great opportunity to put on a ratio call spread, like a 1/2. And the one I'm looking at is only a couple weeks away. It's the March 1st expiration. The 187.5, 190. So selling one of the 187.5s, but buying two of the 190s. So you look for that breakout. Boy, that is really cheap right now, and that can have a nice return on a pop-up.
Okay. How about IBM at 185 today, Ben? Your thoughts on that chart, please.
Yeah, in many ways, Nicole, an identical chart in terms of similarly depiction here as far as Disney. Taking a look at the more short term first and foremost, and then we can kind of work our way into that longer term. You're going to see a trend higher across multiple time frames here, though. First, I've got a 30-minute candle chart, and as Scott mentioned here, this stock reacted to earnings. High conviction. You see the vertical phase here, higher highs, higher lows. And then you can see that we transition into this sideways consolidation where the market accepts that new upper level, right? No rejection as of yet. Again, we've got a 30-minute candle chart here, and I just want to show you some of the areas of value that the market formed. We've got 174, breakout to the upside to 197, and then we go sideways. And just kind of calling it 187 here. It's a little kind of odd lop shaped. You have to sort of take a step back on this one, but let's do just that. In fact, as you do, you can see a longer term trend playing out, easily identifiable, the area that we just talked about right here, right? Similar pattern here. Again, back in October of last year, we had a nice little lift in reaction to earnings. And so I went ahead and identified some of these areas where the market's paused and then gotten back into that vertical phase. And you can see a staircase type pattern playing out, much like Disney, well defined off the lows from last fall. Areas that have formed at higher and higher levels, and now we're currently balancing again around 187 on the bigger picture. Hey, as long as we hold above 174 on this hourly candle chart, you're in good shape if you're bullish this one. Let's take another step back. I want to show you what's going on. And here we got a daily candle chart. So we've gone, again, from a 30-minute, just looking at the last reaction to earnings the last week or so. And then you've got move off the October lows. Now we're going all the way back to May. Similar pattern here. Again, areas of consolidation that continue to form at higher and higher levels. Exactly what the bulls are looking for. Again, as long as we hold above this 160 level, it looks like they're still in charge here, Nicole.
Okay, thank you for that. And the question too is how we've had this run. I mean, the speed and scope of this market, 7% gain on the S&P 500 in just 5 weeks. I mean, it just feels pretty fast at the same time. Any final thoughts there, Scott, about IBM, and then get to Adobe, please?
Yes. So what Ben pointed out, that consolidation in IBM, that's exactly what I was talking about, what I'd be looking for in Disney. That's what you want to see to get more conviction that the recent move is being accepted and being held. So I love that consolidation in IBM, and that's why I like this, potential pop to the upside.
Okay, last but not least, Adobe. Your thoughts today?
Well, 3 for 3 on the upside today. This is an under the radar performer as well with great upside potential. And I think it can get past its 52-week highs. Above the 639, 640 area, there's dead air. 675 is probably the next stop. So, these stocks in this space right now, they've just been breaking free from any resistance levels and give great upside potential. Now, unlike IBM, implied volatility, option volatility in Adobe is actually pretty expensive, where it was really cheap in IBM. So you can still have a position playing for a big upside breakout move, but a little bit different position. And the way I would look at this is doing a ratio call butterfly. So a 1/3/2, which gives me long delta, room to the upside, but it doesn't get me long premium. It doesn't get me long Vega or volatility. So if Adobe implied volatility does start coming back in, that's not going to hurt my position. But again, I love the breakout potential here.
Okay. Let's see what Ben says about the technicals on this one.
Yeah, somewhat range bound as of recent, that's for sure, Scott, right around 600, Nicole. But I do like the idea. Well, I can point to how it's been a bit of an underperformer, but only as of recent, because we're still in a pretty well-defined uptrend. Let's just begin. First and foremost, I got an hourly candle chart here. Look at this, just a mess, right? No real well-defined staircase type pattern that we look for. You can see going back to November, you've got an upper extreme around 630, 640. You've got a lower extreme beginning of the year. What was that? Down around 560, 570. But take it all and just step back. You're going to see basically we've been kind of range bound around 600. And again, not a lot of conviction on this one since November, but that's about where we started to go sideways, because take a look at the longer term chart here. Now we've got hourly, and we're going all the way back to, we're talking about November, beginning of November, because here you can see once we transition into that 600 that range that we've been forming around 600 actually came after some pretty well-defined conviction to the upside into the end of October, beginning of November of last year. Let's take one more step back away from the hourly candle chart, because this is where you can really see this trend coming into play here. Currently balancing around 600. You have a bit of a double top up here, again, around that 630, 640 level. You've got a very well-defined lower extreme, which held a key area, upper extreme of the range that we had been in prior to the breakout here. But hey, the way I see it, as long as we hold above 540, this is still bulls in control here. They seem to be in charge right now. And I have to agree with Scott. We're 3 for 3 on stocks that are exhibiting well-defined trends across multiple time frames. We looked at more intraday, more intermediate, and here's a pretty good example of a longer-term daily candle chart. Easily identifiable bottom left to top right.
All right, thank you for that. Great to see you on the technicals and all these charts, Ben. And Scott Bauer, you get the final thought here today, please.
Again, Nicole, I'm going to go back to what I said at the beginning here. Ride the trend of the marketplace, but take advantage of being able to buy some very cheap insurance to the downside, because we are going to get a pullback at some point. But while the market is like this, and whether you call it euphoric, whether you call, whether you're looking at it as we had a couple of years ago where things maybe are just don't make sense, but they're just trending higher, ride that trend, but be cautious and buy that cheap protection.
Scott Bauer, Prosperous Trading Academy. Ben Lichtenstein on those charts. Thank you for today's Big Three, kicking off a new week. Really appreciate it.